Welcome to the April update for the managed discretionary account in the Hopkins Group. We had our investment committee meeting on Thursday last week and made some changes to the Australian share part of the portfolio, and those that have the direct investments within the portfolio. We changed the investment manager from Blackmores to DNR Capital, and we made that decision after a number of months of investigation and felt that the DNR were going to be able to provide outperformance above the market than what sort of had been achieved with Blackmores. It was a very obviously difficult decision, and we put a lot of work into it, but I'm comfortable that DNR are going to be able to provide exposure to obviously high quality businesses listed on the ASX, as well as some of the emerging companies, which we think is going to add a lot more value to your portfolio. Overall, from an economic point of view, things are what we sort of had anticipated, and things are performing pretty well and pretty in line with what we had in the portfolio. So, we're comfortable with that sort of neutral to slightly, bullish view of the way that the portfolio is positioned, and, sort of really comfortable with the way things are panning out. With regards to sort of the asset allocations and sort of the discussions that we were having within the portfolio, it really is obviously around sort of the hedging. We're only 30% hedged within the portfolio, and whether it's worthwhile increasing that exposure to be more 50-50, and felt that on the balance of probabilities at this stage it's still better to remain with less hedging than the 50-50 level, and then also sort of around that fixed rates versus floating rate positions within the fixed income portfolio. And again, we considered moving money from the floating rates back towards more of the fixed, but again felt that at this stage, and the analysis suggested at this stage, was better to maintain sort of that exposure to the floating rate notes rather than the fixed, and would look to get some of those fixed rates perhaps later in the year as the cycle develops and we get a bit more clarity around sort of rising interest rates and the expectations for those interest rates, because inflation remains sticky. Obviously in the US and the UK reported a higher inflation number, and that stickiness sort of indicates maybe that further interest rate rises are required, which is why we sort of maintained that exposure to the floating rate notes. Those who follow the portfolios closely will recognise that there's been a few changes in terms of the investment managers moving from towards Macquarie True Index, which is an index replicating fund that has a zero management fee. So again, obviously looking for ways to improve the costs and reduce those costs for you as investors, and also in order to maintain that exposure from an index point of view, that you're getting the exposures that you need to the big companies. And again, obviously that's sort of part of the ongoing management of the portfolio. So you will notice some subtle changes, but broadly this month there has been just that change, and you'll notice it from May that some of the listed investments will change, and that we've appointed a new manager for that area. But broadly, we're really happy with the positioning of the accounts and where they're going, and we'll give you an update next month. Thank you for watching.